we're talking about a 25% drop from here. So again, I think the second half is going to be, I mean, this is going to be the kicker for the second half, is it's going to be a point where investors finally realize that so normally we see risk on being something that drives Bitcoin up. But over the last month with the banking crisis, we've actually seen risk off be a positive for Bitcoin. So this kind of a weird thing where Bitcoin, people aren't sure, wait, which one is it? Is it a risk on asset or risk off asset? And right now the price action is telling us it doesn't know, right? I mean, we're even seeing the banks selling off a little bit today, and that's not even driving Bitcoin to the upside. So the biggest thing to do here is look at the chart. And I think the chart really tells us a lot about where Bitcoin is relative to where it could go. So if I zoom out on my chart here, and this is amazing, we're going back to the levels that were the lows during the bull market. And that's where Bitcoin is hovering just underneath. And so if you think about it on a psychological basis, this is like the Great Wall of China. I mean, this is the epic wall of Bitcoin's price action. And so that explains a lot why it's having so much trouble breaking above this $30,000 level. So for me, when I look at this, I stay bearish or a suspect in terms of whether or not the bull market is back on in Bitcoin. I'm still favoring the fact that we're still in a bear market in Bitcoin until we get over 30,000 and hold above it. Because right now, this is the line in the sand. And if Bitcoin can't get through this, it's still bear market central. The key is this level, right? So if we did get above 30,000 and we stay there for, let's say, a week or so and establish ourselves back above that level, I think at that point, then I say, okay, listen, we're back above the psychological lows from the bull market of 2021. Now I think the low is in. But as of now, to me, this is a run-of-your-mill bear market rally. If you go back to 2018, 2019, we had periods where we were up 100 to 200% off of the lows in Bitcoin, and yet we still came down and retested that 3,500-ish low. So you can't get too excited yet when the technical level that is the huge wall in Bitcoin hasn't been broken yet. So I'm sticking with 12 to 13,000 and maybe as low as 9,000. That doesn't trump fear. It doesn't trump emotion. And so for me, as soon as the banking crisis started, I said to myself, all right, this is exactly why Bitcoin was created. This is the essence of why we need Bitcoin. But again, in the shorter term, when you see panic, like when you go back to the COVID 2020 March period where things were in really a panic central, you saw even gold selling off because during panic, people don't ask questions. They sell. They ask those questions later. And I think that's what we're coming into. We're coming into a period in the equity markets where I think you're going to get a realization there's a recession. I know we'll talk the S&P in a little while, but you're going to get this sell-off in the stock market. My guess is it bleeds into crypto and it creates more selling in crypto to the downside. Okay. Yeah, so if we get above 30,000, and I think this is key, is that a break above for a day or two, that doesn't matter to me. I've seen algorithms that'll do that purposely to stop people out or actually convince people that last little bit of FOMO to jump in on board. Think about the 65,000, which was the early 2021 high, and the 69,000 level where it convinced everyone we were headed to 100,000. But if we stay above there for a significant amount of time, a week or so, then likely that tells us that we are going to head even higher. Your next leg probably has the chance to take us up towards that 35, 40,000 level probably over the next month or so. Yeah, I mean, it's so tough to know what the heck's going on here. I mean, you know, Elon Musk, again, he loves catering to the crowd, to kind of the smaller investor, the retail crowd. And so on a technical basis, we can see that you actually had this beautiful kind of what we call a wedge pattern. It's a triangle pattern, and we broke above it. But on a technical basis, look at where we went. We went right back to the highs of February of 2023, and that's where price stalled out. So again, I think in terms of this becoming a mainstream asset, the only way that happens is if he really incorporates Doge into Twitter as a form of payment. That could then give it some relevancy. Otherwise, I always sell these type of events because again, I still remember when he came out and he was pumping and he went on Saturday Night Live. That was actually the high of the asset back then. And to me, it's more you sell these type of crazed pumps where everyone's FOMOing it. Yeah, so I am absolutely short right now on this stock.
Okay.
I do have a price point, I think is right around 274, so I'm out of the money just a little bit on this. The reason I'm short it, number one, it was the best performer of the first quarter. So what we saw later in the quarter is a lot of window dressing. For those of you guys that don't know what window dressing is, it's essentially where people, the funds out there, they say, hey, let's make our statements at end of quarter look the prettiest we can, so let's buy the stocks that were the best performers. Then when those statements go out to clients, they say, oh, they were in an NVIDIA. Well, guess what? They probably only bought it at the end of the quarter, but it's still, again, the investor, the client doesn't know that. So you saw a lot of additional upside here on this stock. When you look at the valuation, when you look at the chart in front of you here, you can see so many technical levels right up into this level. So to me, it's run way too far too fast. The valuation has gotten out of control. And remember that chip stocks are cyclical. So if we are going to go into a second half recession, which is what all my metrics are telling us, then the chip stocks are going to see some downside momentum here. And even NVIDIA, which is running on AI, that's not going to be enough to sustain it because AI is still too far away from giving them a boost to earnings. Okay. So yes, this stock, again, a runner of immense proportion. It's had such an amazing move, but take a look at this trend line. And I love when we go into charts, and again, trends are essentially the lines that I draw where I connect highs and lows, and essentially I become a kid again when you have those like dots on this on a page and you connect them into be different things. But essentially what we take here is the low from March 09 and we connect it to the high here from 2020 and the highs from 2021, and the price is right into that level. In addition, this is the weekly chart, and granted it's only Tuesday, but this candle formation is called a topping tail, and generally that is a signal of distribution. It tells you big money is generally selling price, and price is going to pull back. Now again, longer term this may be a great performer. I'm much more of a short-term trader where I'm looking for moves over the course of 1 week, 2 weeks, maybe a month, and this is telling me it's ready to pull back. So short term you're into a little resistance, but I will say this is the type of chart that after a small pullback, and the reason why I say small pullback is because you've literally had 1, 2, 3, 4, 5, 6, 7, 8, 9 days up in a row. So charts just aren't meant. There's going to be coaxed sellers out there where they start to come out from the woodwork. But if you look at the bigger picture here, there's a clear bull flag, right? So you have an up move and you have this downward slope. So you did break out. So on pullbacks, you buy this. And like you said, McDonald's is probably a beneficiary of a recession. Cheap food, that's where people are going to go when they lose their jobs. And again, this would be a buy on a pullback. So we can flip over to the S&P 500. And I think it's important to recognize that the S&P has really gone nowhere in a long period of time. That's actually not a good thing. When you have a big drop from the all-time highs and then you get into this consolidation pattern, what it tells you is there's an equal amount of buyers and sellers, and that's why price is chopping sideways, right? One seller equals one buyer. Problem is, we know the retail crowd continues to be buy the dippers. So why haven't we gone higher? The answer is smart money, big money, institutional money is likely selling into it. So ultimately, my guess is we have another leg down in the second half of the year. We retest and actually take out the October lows and probably head down towards that pre-COVID high here on the chart. So I do have a downside price target at minimum by year end of 3,300 and change. I do think worst case we could even touch 3,000. And from 4,000 to let's say 3,000, we're talking about a 25% drop from here. So again, I think the second half is going to be, this is going to be the kicker for the second half, is it's going to be a point where investors finally realize that we are definitely going into a recession and that the Fed can't bail us out by cutting rates aggressively or printing money because inflation is so high. All right, in the past, in the last 10, 15 years, any sort of blip in the screen, case in point, 2018 in December, markets dropped about 20% in 6 weeks. The Fed started cutting rates immediately. They could do that because inflation was sub 2%. They could do what they did in COVID because inflation was sub 2%. You can't do that with inflation up above 2% or 3%, as I think it's going to stick around. And that's going to be a realization that is scary for the market. It's like a child where the bumper sides get removed. You're now open to get hurt by the reality of the market. And that's going to be pretty scary for the markets. You're going to see a big sell-off when that realization. Yeah, so natural gas is such a tough one here. And again, the price has just been absolutely hammered. I will say, just go on record, I am long natural gas down here. I will add lower if it goes a little lower, so I don't have a full position at this point. But I'm in the metric of saying that it's a commodity, and generally inflation is going to remain high. At these levels, over time, we will go through the excess inventory that we have. And again, I think one of the things that people are missing is that compared to last year, there's 20% more natural gas in storage than there was 1 year ago. In addition, when we were up at the $8, $9 level, there was such fear that Europe was going to have this major issue because of Russia cutting off gas that there were so many funds that went long, they're all in the process of liquidating and selling their positions. So that's really putting a lot of pressure on natural gas. Having said that, if you have time to wait it out, $2, sub $2 down here makes a lot of sense. Eventually, producers will cut back, and you'll have natural gas obviously starting to move up as supply diminishes. So again, I think this is a patience trade. Eventually, I think it trades back north of $3. So I think there's a lot of good upside here. You just may have to weather a little bit more storminess in the charts. But I am long natural gas. And this is, by the way, I remember talking 6 months, a year ago with you, and I talked about how even when the dollar was up 20%, and gold was only down, what, 5% on the year in 2022, how bullish that was, because in a normal market, if the dollar's up 20%, gold should be down 20%. And so it told us there was big money accumulating. There's no bigger money than central banks. Central banks were buying. That was an indicator to buy. We've obviously seen the price action. Now we had this little flag pattern. Look at this beautiful flag and breakout today on the back of what you're mentioning. And also the dollar is getting substantially weaker today as well. We are going to go up and attack this triple top up here at around 2075. You might get a small pullback there, but I still have it priced in that gold is going a lot higher. The momentum trade hasn't even caught up to gold yet, so I think 2,300 by year end is a no-brainer, maybe even higher. But again, I do think that gold is following the playbook of the 1970s, the same chart pattern playing out. In fact, heck, I got to go back and show you guys here. Let's go back
that's
here.
Very interesting to me.
So this is, and I've talked about this for the last year, how this is what was going on, where you had the same, like 2018 to 2020 and change. That was this run up, which lasted from 1970 to 1975. Right. We then had this sideways pullback. Even when inflation was going up, you had this pullback in gold. All right, same thing happened over the last 2 years, from 2020 to 2023-ish, early 2023, and then look at what happened afterwards in the late 70s into the early 80s, this meteoric rise in gold. So I think that's the replication. If you look back historically, this is the only period in recent, semi-recent history we have to go off of, and it really tells us that gold could have its moment here. We've been waiting a long time for gold to have its moment. It might soon be here.